In Q2 FY2025, ICICI Lombard was expected to post a net profit of 680 crore rupees, as seen in analyst forecasts. However, the company surpassed expectations, reporting a 20.2% increase in net profit to 694 crore rupees. This rise was driven by a 10.4% growth in gross direct premium income, GDPI. ICICI Lombard's impressive performance highlights its resilience in a competitive market. The company also announced an interim dividend of 5 rupees and 50 paise per share for the first half of FY 2025, reflecting its commitment to delivering value to shareholders. ICICI Lombard General Insurance is one of India's leading private sector general insurance companies, offering a wide range of products and risk management solutions. With a market capitalization of 99,606 crore rupees, its current stock price stands at 2,012 rupees. The company has a strong financial foundation, reflected by its earnings per share, EPS, of 42.8 rupees, a return on capital employed, ROCE, of 22.5%, and a return on equity, ROE, of 17%. Its price-to-earnings, PE, ratio is 47.2, and its dividend yield is 0.30%. ICICI Lombard continues to play a crucial role in India's insurance sector. Looking at the 5-year historical price-to-earnings, PE, ratio of ICICI Lombard, we observe that it has fluctuated between 22.6 and 55. Over the past years, the PE ratio dipped in early 2022 but gradually increased throughout 2023, reflecting improved market sentiment and earnings performance. Currently, the PE ratio stands at approximately 47, surpassing the company's median PE of 45.8. This indicates that the stock is priced at a premium compared to historical levels, likely driven by consistent earnings growth and market confidence in ICICI Lombard's future prospects. ICICI Lombard has shown consistent growth over the last 5 years, with compounded sales growth of 13% and compounded profit growth of 13%, demonstrating the company's ability to expand both its revenue and profits at a steady rate. The stock price has also reflected this performance, with a compounded annual growth rate, CAGR, of 10% over the same period. ICICI Lombard's focus on profitability is evident from its 18% return on equity, ROE, over 5 years, highlighting its efficient use of capital to generate shareholder returns while maintaining growth momentum. Looking at the technical chart of ICICI Lombard, the stock has recently pulled back from its peak at 2,250 rupee to around 2,011 rupees, offering a potential buying opportunity. However, it is important to note that the stock is still trading above its trendline support, which sits lower around the 1,750 rupees to 1,800 rupees range. While the stock is at a discount from its highs, it hasn't yet reached a key support level, suggesting traders may want to wait for further consolidation or a bounce near the trend line for a better risk-reward entry point. Tata Consumer Products was expected to post a net profit of 343 crore rupees in Q2 FY 2025. However, the company outperformed, reporting a consolidated profit after tax, PAT, of 364 crore rupees, an 8% year-on-year increase. This strong performance was driven by a 13% rise in revenue, reaching 4,214 crore rupees compared to 3,734 crore rupees in the same period last year. Tata Consumer's India Beverages segment grew by 3%, despite a slight decline in tea volumes, while its India Foods segment saw a 28% growth in revenue. Overall, the company continues to exceed market expectations. Tata Consumer Products, part of the Tata Group, is a leading player in the food and beverages sector, both in India and internationally. With a market capitalization of 1,08,572 crore rupees, the company's stock currently trades at 1,098 rupees. Tata Consumer has established a strong presence with brands like Tata Salt, India's largest salt brand, and Tata Tea, the second largest tea brand globally. The stock's PE ratio is 81.8, with a return on capital employed, ROCE, of 10.6%. As a major force in the FMCG sector, Tata Consumer continues to drive growth and deliver value. Looking at the 5-year historical PE ratio for Tata Consumer products, we see that the company's PE has been quite volatile, ranging from 60 to over 100. The stock's median PE is 71.8, indicating it typically trades at a high premium, which reflects its strong market position and growth potential. Currently, the stock is trading at a PE of around 81.8, slightly above its historical average. While the company continues to deliver solid earnings, investors may want to consider whether the premium valuation offers a favorable entry point based on growth expectations. Over the past 5 years, Tata Consumer Products has delivered strong and consistent growth. The company has seen a compounded sales growth of 16% and compounded profit growth of 27%, showcasing its ability to scale its revenues and profitability. This growth is reflected in its earnings per share, EPS, which has steadily increased to 11 rupees and 52 paise in FY 2024. The company's stock price has also demonstrated a 31% compounded annual growth rate, CAGR, over this period. Tata Consumer's consistent expansion across its product lines continues to drive impressive financial performance. Looking at the technical chart of Tata Consumer Products, the stock is currently trading at 1,097 rupees, a discount from its recent highs of 1,253 rupees. The stock has shown a strong uptrend over the past year, but is now approaching a key support level around 1,050 rupees. If the stock reaches this support zone and holds, it could present a good buying opportunity for traders looking for a favorable risk-reward entry. A bounce from this level could signal a continuation of the stock's upward momentum, making it a good candidate for short to medium-term gains.